Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, April 18th, 2013. Yesterday, I showed you the short-term charts on several of the U.S. markets as well as the Toronto Stock Exchange, and I showed you why I could anticipate, why I was anticipating a major move to the downside in the markets. It hasn't even actually developed yet. We've seen a little bit of a pullback for the past few weeks, but nothing real major there in the U.S. markets. So today I thought I'd show you another way of looking at this, and for those of you who may see the pullback happening and think, well, there's still a little correction, maybe time to start buying or something like that. I want to show you why, even if you have a perspective of, okay, I'm going to be bull and look for an entry opportunity, why you don't want to do that here. We're going to look at 19 major markets that I track for you guys at PerfectStockAlert.com, but we're going to look at the longer term charts. Now, you guys know I do this on Fridays, but I cover the short term charts. Today we're looking at the long term charts. Again, these charts are kept, both the short term and long term, on the free website at PerfectStockAlert.com. You can check it out whenever you like, and they're updated every single night with my annotations, so it's important. But today I just want to give you a quick little look here, and I've always recommended that people always compare your long-term charts, being your 2-year weekly charts, as well as your short-term daily charts, your 3-month daily charts, so that you get an idea of what's going on, the bigger picture as well as the smaller picture. Right now you can see the Australian ASX AORD right here. We on the longer term chart have pulled back to an uptrend line that we've had right here. And this is something we've, like I said, had drawn out for a while. So we expected this little bounce here, but what happens here is important. Now, if you come up here, if you bounce off this and you go higher, well, then that's one thing. But if you come up here, you bounce and you fail to go higher, you now have a lower series of highs, and you have what's developing a lower series of lows. The trend is now shifting to the downtrend here, and that's important. And also, if you were looking at this as a little buy opportunity, and this breaks, being at about the middle Bollinger Band line here, that breaks, your next point to find support will be way down here. So on the shorter term charts, you see that we're already breaking down. So on the longer term charts, you can see that in fact this would not be a good place to be trying to go long. Even if you're bullish, don't do it there at the middle Bollinger Band line. Wait for the pullback closer to the 4,600 level. Let me make sure I'm very clear here. I'm kind of playing devil's advocate here. 4,600 is where a bullish person would be looking for their entry opportunity. I'm not bullish. One more little detail regarding the Australia market chart I want you to pay attention to. Note the bearish divergence. High point here on the ultimate oscillator, lower high here, longer term chart showing that this little move here during the same time period that we had the price activity moving higher was bogus and was going to be erased. That's exactly what you see breaking down happening here. You don't start selling when you see this develop. You wait for it to start to break down, then you get short. That's what we did here. You can see the same thing happen back here. High point, lower high here, trending down. So it's important. It's a early warning indication of what's about to happen. So whenever you see that, pay attention to that, because you're going to see this on several charts. Looking now at the Dow Jones Industrial Average long-term 2-year weekly chart, each one of these candles represents a week worth of trading activity. So even though today we can see that we have broken this uptrend line, we're closing below it, I have to warn you that today's candlestick is not actually finished the formation for the week. So we have still Friday's trading activity, and two things can happen. Either you will stay where you're at and close below this uptrend line and break this uptrend line, which would be another sell signal, or you can jump back above there, closing above it. But you will not alter the fact that you have pierced it. If you've watched the videos on the free website at PerfectStockAlert.com teaching technical analysis, we have videos talking about trend lines, and one of the things that we teach there is that whenever a trend line is pierced, it's a precursor, a warning sign, if you will, that the thing is about to break and then break in the direction of the pierce. So that's important to note. And again, this is overbought. It hasn't even broke down yet. Yet again, look at the bearish divergence formation here, right here, showing momentum is decreasing. The same time period, price was continuously moving higher. Told you this was not sustainable. Basically seeing the exact same thing. This is still a great short. Looking now at the French CAC 40 index. In this particular chart, you can see some bullish patterns set up right here. We had this little cup and handle formation we talked about. Told you to be long. Whenever you broke out of that, tested this support line, and then you bounce up here. Remember, this is resistance for a while. Once it's broken above, it turns into support. You bounce off of that, you start moving higher. Good trade. Everybody is happy on that, making money. However, there's something else you need to remember. Whenever you have a downsloping neckline, or this little dotted line right here, whenever you have a reversal pattern from a downtrend to an uptrend, the slope of that neckline there is going to be very important, and I'm calling it a neckline just for saving us time. The situation where you have a downslope, where the high point here is higher than the one over here, you're going to be sloping down. The angle of that trend line will be sloping down. That tells you that in fact what you have is a weak move to the upside. And it's important that you remember, if it had been sloping the other direction, where this had been higher, and then we pull back, then we'd be sloping up, that would have been more bullish, okay? So it's always important, it's always key that you pay attention to those details. Again, you'll see the same thing on head and shoulders formation. We talk about that a lot. And again, these things are all discussed in our tutorial video section on the PerfectStockAlert.com website. So if you don't already know that stuff, you can check it out right there. We already teach it, okay? The main thing I want to show you about the French CAC 40 index, all you did was you broke out, you run up here, you hit your resistance point. You got the high point here, lower high here, trending down, same time period. On the price activity, you're getting higher. You see that this is just a bearish divergence telling you it's getting frothy, it's going to break down. That has happened here, and now you're getting sell signal, confirmation, all at this previous little support line. So now I'm going to break through that, find resistance there, and go much lower. How low? Well, down here would be that about roughly where I'd be looking for some kind of a bounce. Alright, let me clean that up right quick. So you're asking him, why do I see that being how low we're going to go there in the French markets? I think you're going to go down to that point, and we may even go lower, but at that point, you'll justify the chart. And I say that because you got this high point here on the momentum indicator on the ultimate oscillator, and then lower high, lower high, lower high, lower high. All you're doing here is a massive downtrend line here. At the same time period, you have this high close here and then these higher close here. That's all going to get wiped out. So that's why I'm saying all of that gets wiped out. Looking now at the Milan index of the MIB, same basic overall chart patterns we saw on the French market. You can see this little cup formation up here, start to form this little handle formation. But again, note the neckline here and here. You can see that we're sloping down, telling you this is not a massive big move to the upside and nothing. Typically, if you were sloping up, you would measure this distance in here and say, okay, I expect that from the breakout to be added to it. You're nowhere near that, and you wouldn't expect it to be because the neckline was sloping down. So you had your bounce, now you're coming back down here, getting sell sign side. So you still have a lot of room to move to the downside. And with gold breaking major support down at these levels, I would expect you're going to see a lot of charts starting to follow that. And we'll talk about that later. But the main thing here, look for a big move to the downside still to come. Looking now at the German DAX composite, again the 2-year weekly chart, and again pointing out the uptrend line here and the breakdown closing below that with a sell signal following it, confirmation the next day. This is where you start selling here. This is a very good entry opportunity here, and I expect all of this will get erased and we'll pull back down here to the 62.50 line, something of that nature, testing this low here. Again, note the bearish divergence formation, high point, lower high, lower high, lower high, lower high. Same time period, you've got price activity just moving higher. So all of that is just bogus. It's getting wiped out. Would you be a buyer here because you've pulled back down the ultimate oscillator, pull back down to the 30 line like you did back here? You've done that again. Could you be a buyer at this point? I wouldn't, and the reason for that is resistance is now this. Let me clean that up a little bit. This blue line hit an uptrend line right here. This guy was acting as support right here and right here. Well, now that you close below it, it's going to act as resistance right here. So to try to be a buyer here, upside potential's here, downside potential way down here. I wouldn't take that trade. The long-term chart on gold, same basic overall pattern we saw on the MIB as well as the French CAC 40 index. You've got this little cut formation forming here. We were watching it, tracked it, and noted it on the chart. And then we put this downtrend line here. So we're just watching this little, if you want, you can call it a handle formation here. We told you wouldn't be a buyer unless you close above it. You actually get a candlestick that closes above it. That never happened. You just found resistance, bounced off of it, found resistance, bounced off of it, found resistance, bounced away from it, and then what did you do down here? You took out that previous support line, broke down through it, no problem. That's what I expect you're going to see on all those other charts I was just showing you. So keep that in mind. You got a big move to the downside still coming. Might as well take this opportunity to teach you guys one more thing here. Looking at the gold chart, you can see where you have bounced off the 30 line before. It just means you're going to bounce. Doesn't mean to change in the trend. Doesn't mean any of that thing. So just because you get an oversold condition on your momentum indicators, whether you're using the slow stotch, fast stotch, full stotch, RSI, whatever it is you're using, just remember that just because you pull back down there doesn't mean you go buy. You need to pay attention to the trend. The trend is more important. So you have got the downtrend like this. You want to work with that. You want to be selling here, selling here. Whenever you get a bounce opportunity, look for the sell signals, sell it again, and keep doing that. And as long as it's in a downtrend, you continue to trade that way. When it shifts, you'll start to get higher highs and higher lows, so forth and so on. Right now, you don't have that, so leave it alone. Looking now at the Hong Kong Hang Seng Index, you can see the major uptrend line has broken about 3 weeks ago. So again, we're not going to be messing with this on the long side. Once the trend has broken, it becomes no longer support. It's now resistance. Any little bounce that you might have off of these moving average lines here are just going to be short-lived, so I wouldn't mess with that on the long side, and I would be looking for this to come back down here and test the lows before we ever consider any kind of bounce. And again, we are in a downtrend, so continue to look for short opportunities, not long. Looking now at the BSE, or the India Bombay Stock Exchange, this is one on the shorter term chart that I'm actually looking for an entry opportunity on the short side. Keep an eye on that. I'll be talking about that tomorrow as well and show you a shorter term chart. I'm looking for a good entry opportunity on that because what we have here is a clearly defined downward move, trading lower lows, lower highs. Now we have a new bounce here. I want to look for that opportunity to get short. So when I start to see resistance, probably at the 50 period, I mean not 50 period, the middle Bollinger Band line, roughly that distance there. When we start to see that down, get short again. Also, if you're looking for a nice move in the ultimate oscillator, look for it roughly at the 60 line, not the 70 line. Don't be looking for getting overbought again. Once you get in a bearish market, you start to see less and less of that condition. Back here, you had a bearish market. You didn't hit over the 70 line here as well. That's one of the things you should learn to watch for. Again here, you're getting that bearish divergence formation while price was going higher, telling you it's going to get wiped out. It gets wiped out. Now look for a short opportunity to get short and take this guy lower. Again, no hammer candlestick indicating at bottom here, so we're going to test this again. Looking now at the Japan iShares of the EWJ, this one is, of course, the only chart that we're tracking that doesn't actually break its uptrend line, or hasn't yet. So that's important to know. I am short it. I have a very tight stop on it, just because I don't expect it can continue to rally to the upside while other global markets are breaking down. So that's why I'm short there. But it's probably just more of a greed thing to me. I just want to be short everything. So I've tossed it out there, but I have very little risk on it. And with the gains I have on everything else, it doesn't really matter to me. So I'm just trading this as expecting it to follow the global markets lower. But again, this is going to be one of the most difficult shorts because they have so much money they're dumping into their market right now. Looking now at the London Financial Times Index, also known as the FTSE, you can see we broke the uptrend line. We talked about this when it happened. You closed below that, then you turned around, tested it, found resistance at that point, and then you've just rolled over. Now you've got, again, another nice good sign to the downside here. Nothing here indicates that you're going to be stopping at this point. You are seeing a topping formation here. I could zoom in and get all kinds of information on it. You could see a little shoulder formation here, a head formation here, next shoulder here, rolling over. I could draw the trend line. It's obviously down. Those things will tell me that we're looking for roughly under the 6,000 before you ever get a stopping point again. So look for that to test this point, and then from there we may even go lower. Looking now at the NASDAQ, this is a very bearish chart for many different reasons. We talked about this back when it happened. We had this formation going on here, very bearish formation. Told you these typically break down. Roughly 70% formed, and they're starting to happen here. You could have seen this as two different ways. I actually analyzed it and said this is actually closing below it. Somebody else went to say no, it was just piercing it. Either way, it's a warning that it's going to break, and it's going to break to the downside. That's exactly what happened. You can see we have that this week. Again, you did bounce up here and test it again, find resistance, and closing below it now. The thing with this chart is this right here is very bearish. And so with that and this in mind, you say, okay, we have the move to the downside and their bearish formation. Say, well, that's all going to get wiped out. So we take out all of this stuff. Where are we going? Well, 26, 22. That's a long way from where you're at right now. That's an easy move right here. Again, a big, huge bearish divergence. There's so many different elements of this chart that just don't look good. I can't even begin to number them all for you in this little video, but again, I see lots of downside potential here. Looking now at the XOI oil index, this is another one we're short. Again, note the previous signal here. You have the high point on the ultimate oscillator, lower high here, moving down. Same time period, you have high point here, and then you have continuation of the high. Continues a little bit, not too much. You might have been viewed as being more of a flat signal, but either way, it still is not in line with what you're seeing on the ultimate oscillator, so it's still a bearish divergence formation. Then you get a sell signal and then a confirmation. So this is right here where you'd be saying, okay, I have a sell signal, now I have confirmation, I short. No reason to be looking at this market as, oh, maybe it's time to be buying. No way. Just because it's taken a few weeks to do it doesn't mean anything. You need to look at the fact that the chart's telling you now, sell at this point. So you still have a lot of downside potential. Again, reminding you what happened with gold's long-term uptrend line, and as well as silver. What do you expect to happen to this commodity XOI oil index? I expect you'll take out this line no problem. So we move them lower again here. Looking now at the UUP, or the U.S. Bullish Dollar Index Fund, and this we're basically tracking the dollar here. You can see in this particular chart that we don't have a lot of good signals. We have a broken up trend line, pull back down here, low point, bounced up here, low high, compared to the previous one. Come down here, made a lower low, and now a higher high. We're getting mixed signals. There's higher highs and lower lows. It's basically sideways moving activity. From a fundamental perspective, we had the Fed printing money like it's Christmas time, so I can't really get bullish on that. However, when people sell stocks and they sell gold and they sell oil and all that stuff, what do they get? They get dollars, and so that puts a floor in the price of the dollar, drives it higher. So I can't get really bearish on the dollar right here either. So I just leave this one alone. Looking now at the Russell 2000 Small Cap Index, again, another very bearish chart with lots of downside potential here, even though we already got tons of money on the gains on the shorter term charts, which again you can see on the website at purposestockler.com. The main thing I want to show you here is that you have broken the uptrend line, same way you had all the others. You have the close below that, which is breaking it. You test it the following period. You find resistance. You back off and you get a little sell signal, and then you get confirmation today, or this week I should say. So this is, again, it's just getting started. We have lots of downside to go here. Bearish divergence formation, of course, there it is. We saw those and talked about them repeatedly. And so that was your opportunity to get there. And even now you can start selling. It's got plenty of room to go to the downside. Where do I see this finding some support? Well, you found support here and roughly the same distance here. I expect you to come down here and test this level relatively easily, and then you probably go lower and get any kind of negative news or something like that, but that's an easy trade down there to about the 800 level. Looking now at the SPX, or the S&P 500 Large Cap Index, again with the long-term charts, 2-year weekly candlestick formations, you can see we've already broken the uptrend line here, this advanced one, and so we're looking at this one now. Either way, you're breaking the uptrend line. Bearish divergence was in play, high point here, lower high here, just nothing new here. And with the only U.S. market now fighting that trend being the Dow Jones Industrial Average and everything else selling off, there's just no way the Dow Jones can hold its own against all that weight pulling against it. So again, I would look for this to start to pick up speed and start to move lower. You will also, maybe on Friday, you could actually see a sell-off that would put us down below that stronger little blue uptrend line right here. Once you close below that point, that's it. You've got nothing in the markets except for the Japan markets that are still in a bullish uptrend line. Once you have 18 out of 19 global markets in the sell-off, there's really little argument to say that no, it's a great buy opportunity. No, it's not. It's the start of a massive move to the downside. You need to take advantage of that, and it goes on again, not for a week, not for 2, not for 3. For several weeks this stuff happens. And again, I'm anticipating a bigger move than any of these are, but all of these were smaller moves and still went on for several weeks, so do not be bullish. Quick little glance here at silver. Basic same overall story as we saw with gold. You had the little chart formation that we saw. It could have been a bullish condition here. We were a couple of different things we were concerned about was the fact that the gold chart was showing more bullishness because their high point between this point and this point was actually higher on gold than it was on silver. But again, when we talk about if gold and silver are not confirming one another, then it's a lot riskier trade. Wait for them to confirm. What they did confirm is that neither one of them closed above this uptrend, this resistance line right here, and so that tells us not to get involved on the long side. We'd eventually break down here and closing below a major support line, and that's important because they're showing a structural breakdown here. You're seeing that on gold, you're seeing that on silver, and watch the other charts. You're going to start seeing it develop there as well. Looking now at the Toronto Stock Exchange, or the TSX, you can see a massive move up here. Looks like we broke out. I actually thought we had over here, but we got a fake runoff and didn't work, and we got a sell signal the following week, and we just rolled over and got a sell signal right here, and then confirmation right here. Right now, you could actually be selling this because I'm expecting this will follow gold and break this major uptrend line. So you've got a lot of sell side still to come here in the Toronto Stock Exchange. Again, don't be bullish. Looking now at the VIX long-term chart, again, as we say in all these videos, when we show you the VIX runs the inverse, or the opposite of the S&P 500. So whenever the S&P 500 is really bearish, you just see the VIX being really bullish and vice versa. Again, we already showed you the bearish divergence on the S&P 500, therefore you should find on the VIX chart the bullish divergence, and that's where we got right there, pretty clear. No really way to argue that. That's moving it upside. Same time period, you had close here, lower close here, lower close here, meaning this was an overshoot to the downside, not sustainable. You were going to correct that and move that way. So again, I'd be looking for this to move up here, and the more we see as a breakdown happening on the S&P, so forth and so on, you're going to see that taking us higher and higher and higher, and we could move substantial to the upside here compared to what we've seen before, as well as what kind of news that we're getting out of the markets right now from Europe. I post that on the Facebook webpage, as well as Google Plus and so forth and so on, so you can check it out for yourself. Looking now at the EMW, also known as the Wilshire 4500, you can see clearly defined close below the uptrend line. I called it 3 weeks ago. At this point, if you thought that wasn't a close below, I mean, it's pretty clear it was, but if you thought it wasn't, you still had to call it a pierce below because your price had moved below that line. And as we teach in the videos, that indicates that you are quickly going to break down and you're going to break in that direction of the pierce. And so you know which move going. You also had the bearish divergence, pretty clear what was going to happen here, and that's exactly what happened. So now what do? It's just started to roll over. Of course you sell, you get out. That's pretty clear, pretty obvious. I don't know why we're arguing about that. That makes perfect sense to me. I also see this as a very, very nasty chart that I've been looking for lots of move to the downside here. All in all, I just run for the hills if you're a bull, and if you're a bear, hey, line your pockets. If you're looking for my long-term or short-term charts, you can go into the market section here. The market charts right there. Click that, you'll get my personal charts with my annotations, and I've actually updated some of the short-term charts as of today. I've marked them showing that there's some situations that if we get confirmation tomorrow, I can start selling them right at that particular point in time. As always, if you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in tomorrow's video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.